morning and welcome. This is Business Morning. Thank you for joining us. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for joining us. Let's begin with this, where Nigeria is losing about $10 billion from tax evasion from multinational corporations. And the chairman of the Independent Corrupt Practices Commission, Professor Bolaji Owasanoye, made the disclosure when he participated in a virtual meeting with top executives of the Federal Inland Revenue Service in Abuja. Professor Owasanoye quoted the figure from the African Union Illicit Financial Flow Report, which estimates that Africa is losing nearly $50 billion through profit shifting by multinational corporations, and Nigeria alone accounts for 20%. Let's take a listen.
We will take some of the recommendations to push for policy reforms that will help to block the bleeding and the loss of financial revenue to our country. And of course, where there is a mix of corruption in the commercial transaction, as an anti-corruption agency, ICPC will be able to go after such funds. As I said last week, illicit financial flows are used both for criminal things, corruption, and of course, commercial. The big part of it is the commercial part, and that is why tax revenue comes into play. There is a presumption, even though it is highly rebuttable, that donor support is available for charitable purposes. Now, given the fact that charitable funds are ordinarily, even in local regime, not taxable. So if that's why you don't tax churches, because it is presumed that they are established for some not-for-profit charitable intention. So if you are giving donor support, the presumption is that you are not doing it for profit. But I said this is a rebuttable presumption because you must unpack the entire intention and the projects that are to be done.
Well, tax evasion from these multinationals is completely unacceptable because when you find yourself in their place, I mean, they won't let you go. You just have to pay your taxes if you're doing your business in their place. So when these foreigners come in here, they try to find a way to evade taxes. Perhaps we're not putting the right things in place.
We need to get our system tighter.
FIRS has a lot of work to do. And if you recall, earlier this year, there was a summit on tax and how to improve our taxes. And there, the president had charged the FIRS to plug all revenue, leakages by deploying some kind of digital platforms. And I mean, the FIRS chairman at that summit had actually put the figure at $117 billion. That's between 2007 and 2017. That's about 5.4 trillion naira.
That's a huge
That's
number.
a lot. So anything to do to get these foreigners to pay their taxes. I mean, we're looking for revenue. We have to get this revenue. The oil market is volatile. We cannot depend on oil revenue anymore. So the other option is to pay our taxes. And the foreigners
and the multinationals
would have
must
to
pay
do
their
that.
taxes.
Absolutely.
Yeah.
Okay, the Amalgamated Union of Foodstuff and Cattle Dealers of Nigeria has lifted its ban on transportation of food items to the southern part of the country. The traders listed multiple taxation extortion of their members by security officials and thugs who mount roadblocks on the highway, as well as the losses they incurred during the NSAS protest and the recent Shasha market crisis as the reasons for the strike. Let's take a listen.
Governor Yahaya Bello of Kogi State, accompanied by former Minister of Aviation, Mr. Femi Fani-Kayode, lead a reconciliation meeting with the leadership of the Amalgamated Union of Foodstuff and Cattle Dealers in Nigeria, who suspended supply of foodstuff and cattle to the south a week ago. The traders cited multiple taxation, extortion by security personnel, losses to the End SARS protest, and the recent Shasha market crisis as the reasons for their action.
This is what had happened in the #NSAS. We lost over 100 northerners with over 100 open trucks. At the #SASA event, we lost another over 151 persons, with about another 70 hospitalized as I speak to you right now. Hence, the reason for why we embarked on no food supply to the other part of Nigeria.
We should reflect on this.
After listening to the traders, Governor Yahaya Bello then appeals to them to suspend the strike as he gives assurances of the government to look into the issues with the hope of addressing them soon.
For you to give me the strength to be in their front and say, please, this is our demand, please answer it. And you know I will do that. You have to do this one single thing for me. Please call off the strike immediately. Yes. We must shame these few individuals who wants to set Nigeria ablaze. We must not allow them.
The governor then leads the union to the presidential villa where they presented their demands to President Muhammadu Buhari.
The association demanded that there are his members that were killed. They are requiring that compensation be paid. The harassment by law enforcement agencies on our federal highways be stopped. The extortion by all touts along the federal highways, especially from northeast or from the north to south, south, and southeast particularly, be stopped.
The president of the union then announces the suspension of the strike.
Today, we are very happy to discuss about the issue to presidency. Already like what our governor of Kogi State say, yes, we agree to what is done, then we call off our nationwide strike.
For the former aviation minister, this intervention is timely and has saved the country from a looming crisis.
Had it not been for this intervention, things would have got much worse. Already things were getting bad. If this had gone on for another 1 month, tempers would have flared, things would have begun to happen, and of course, there would have been attacks left, right, and center and reprisals all over the country. So we thank God that once the governor was asked to do this, he acted within 72 hours and brought the matter to a resolution. And that is extremely impressive. And I believe that if only we could continue like this in national affairs on virtually everything, and we had this sort of strong leadership across party lines, across religious lines, across ethnic lines, our country would be a much better place, and would have a much greater future. So I have to commend him for that.
The last 1 week of strike has no doubt brought hardship on farmers, traders, and other Nigerians across the country. The cost of foodstuff rose in the south, just as perishable goods waste away for lack of market in the north.
And the central bank has announced the release of 50,000 metric tons of maize to major players in the agricultural value chain across the country through its Anchor Borrowers program. A statement from the CBN explains that the release was facilitated in the second week of February to major poultry feed producers and poultry producers in the country. The financial market regulator says the additional release of the commodity has caused its price to drop from 200,000 to about 180,000 naira per metric ton in the Nigerian market, while the current price is expected to reduce further. In January this year, the CBN announced the release of 300,000 metric tons of maize to minimize the activities of middlemen and support local production of the commodity.
And the Nigerian Deposit Insurance Corporation estimates that over 3 million Nigerians have lost about 18 billion naira to Ponzi schemes. This has caught the attention of the Securities and Exchange Commission, and that prompted the recent workshop to enlighten Nigerians on the dangers of engaging in this quick profit scheme. The workshop was organized in collaboration with the Attorney General Alliance Africa. All right, Anthony Idiwe, Senior Partner at Bunuka Attorneys and Solicitors, joins us now to talk more about this. Thank you very much for joining us, Mr. Idiwe.
Good morning.
Thank you.
Okay, let's first of all understand what the Ponzi scheme is all about, because we have multi-level marketing and pyramid schemes. Can these also be termed as Ponzi?
Well, a Ponzi scheme is actually different from a pyramid scheme, but they are both part of what you refer to as investment fraud. A classic Ponzi scheme, however, is a scheme in which the money received from new entrants into the fraud is used to pay out the old entrants into that fraud. Eventually, if they cannot recruit new entrants, bringing in new money, then it will collapse. So that's how a Ponzi scheme works. The pyramid scheme is slightly different. So most of the multi-level marketing schemes you can refer to as a pyramid scheme. The difference essentially between a pyramid scheme and a Ponzi scheme is that with respect to a Ponzi scheme, all the income which comes in goes to the primary promoter. And then the primary promoter redistributes it to the old investors, whilst collecting money from the new investors. Whereas in a pyramid scheme, all the monies do not necessarily go back to the original promoter, because they are in cells and levels and they distribute amongst themselves, and there may be about several centers from where the redistribution is done. So essentially, that's the difference between a Ponzi scheme and a pyramid scheme.
All right, Mr. Edigbo, you are part of the people that conceptualize the training. Why is this relevant and important at this time, and what does it seek to achieve?
Well, given the very desperate economic times for some people, which was complicated by the pandemic, there is a tendency for people to have the perception, and this is based on an excellent study that was done by Jack and Ibekwe in Nigeria, that the general 50% of Nigerian population, based on the survey which they did, although they believe that Ponzi schemes are unreliable, however, they think it's an effective way by which they can emancipate themselves from poverty to make a quick profit, a quick return. So because of that perception issue, that over 50% of Nigerians know it is unreliable, but yet want to do it. And even those who think that it is not reliable, some of them still think that some think it's even reliable, and then that it is effective. So if you add those who think that it is effective and unreliable, and those who think that it is reliable and effective, it comes to close to 70% of Nigerians have that belief, and they are likely to lose because the pyramid scheme or the Ponzi eventually collapses and they may not meet the expectation, particularly for those who invest later. Whereas it is possible that those who invested earlier may get not only their initial investment, but possibly get unreasonable return. The later investors may get nothing at all. And so it's really very unfair. Apart from that, there is no fundamental underlying business that the money is used to. And so it can move money which should be deployed to productive resources in the economy to unproductive use. And it can create a bubble that can collapse, leaving people in tears. It can even cause civil war in a country.
All right, Mr. Idibe. Yeah, now it is the responsibility of the Securities and Exchange Commission to protect investors and preserve capital market integrity. Now, aside from workshops such as this, what kind of regulatory strategy has or can the SEC apply to outsmart this ever-evolving trend?
Thank you very much. There are two prongs to dealing with this matter. The first one is to educate the public, build their capacity to make the right investment decision. And that is why we are having this training. The second one is for the regulator to act proactively. And the SEC is the regulator under the Investment and Securities Act 2007. Based on that, the regulator usually monitors the market. And when they get information about these schemes, they move in and generally they will close it down. They will they will freeze the accounts. They would try to identify the victims. They will identify the promoters, and they take other steps, to deal with the matter. So they including criminal prosecution, and they work together with other agencies such as the EFCC and the police and the central bank, etc. So generally, in addition to that, they also try to regulate the market to provide an avenue for citizens to actually make legitimate investment by licensing fund managers, by regulating fund managers, and regulating every investment, and license anybody who wants to do the business is supposed to be licensed. Who wants to do investment business in Nigeria is supposed to be licensed by the SEC. So if there's no license by SEC, that should be a red flag to know that that company is likely doing something illegal.
So where is the place of the law in regulating the investment climate? And I'm also curious, what's the average lifespan of a Ponzi scheme? Can a Ponzi scheme last as much as 10 years?
Well, it's possible. And that's why you actually need a strong regulator who can monitor the market and be able to do it. And so most Ponzi schemes in Nigeria do not last long. And there's a reason for that. The reason is that they offer unreasonable returns, extremely unreasonable. So, for instance, they offer that you can get 300% return on your investment 1 year, or you get 1% a day, or you get 5% in 10 days, which if you calculate comes to about 300% in a year. How many businesses can you do to give you 300% returns in a year? So it's so unreasonable that, whilst they can get people, new investors, eventually they are unable to get new investors to get money to pay off the old investors because they are not doing any business really. And then it collapses. But if you look at the more sophisticated ones, where they just give just a little bit above what you will get from a normal market, and then they guarantee it, which you shouldn't guarantee for investment. You don't guarantee investment because you don't know it can go up and go down. So they guarantee it. And then at times they give the appearance that they are regulated and they can last for a very long time. Like the Madoff in America was on for over 20 years, well over 20 years.
Okay, Mr. Idibe, just a quick one, before I let you go there. Are there laws to ensure that offenders are punished and perhaps victims get justice?
Yes, there are laws in Nigeria. For instance, to the extent that you are collecting deposits from the public, it could be possible that you can be charged for operating an unlicensed bank. To the extent that you don't call it a deposit, you call it an investment, then you are supposed to get the SEC license based on the ISA 2007. And to that extent, if you look at the provisions of the ISA, you cannot make any invitation to the public for an investment without the registration of that instrument with the SEC. So they have those offenses. Then also it's a pure fraud because when you are telling somebody that you will invest in the money in gold, or you will do it you put it in whatever, well, you are not doing that really. You are just siphoning the money, diverting it, from the account and transferring it out, and then paying the new people, the old people with the new money coming in, and then taking a portion of it. Then you are guilty of liable for things like money laundering, obtaining by false pretense, etc. So there are many offenses under the Nigerian law that are being committed by these scams.
All right, thank you very much, Mr. Idibe, for sharing your thoughts there with us. We do appreciate your time, and when we call you again, please answer us. Thank you. Anthony Idibe is a senior partner at Funuka Attorneys and Solicitors. Commodities Market Update is next.
And oil prices rose for a second straight session this morning as the possibility that the OPEC Plus producers might decide against increasing output at a key meeting later in the day lent support alongside a drop in U.S. fuel inventories. Brent crude futures added 27 cents to $64.34 a barrel after climbing more than 2% on Wednesday. U.S. West Texas Intermediate crude futures gained 19 cents to $61.47 a barrel. The market had been expecting OPEC Plus to ease production cuts by around 500,000 barrels per day from April. Now, let's talk more with Nosike Nwajide, research analyst with Financial Derivatives Company. Hello, Nosike. Thank you for joining us.
Thank you for having me.
Yeah, so OPEC Plus begins the meeting today. There yet another indication that they might decide against increasing output, contrary to earlier expectation of a raise in oil production. Either way, what are we going to see in the oil market?
I think that, before now, the consensus, the analyst consensus was for a further easing of the output cuts. But the Saudi Arabia, the de facto leader of the OPEC faction of the OPEC Plus alliance, so to speak, they've particularly emphasized on cautious optimism repeatedly. And cautious optimism would be let's leave things the way they are and see how they play out by the end of the month. I mean, they unilaterally took off 1 million barrels of oil of their own from their own quota, OPEC. The plan late last year was to ease output by 500,000 barrels a day throughout the year. I mean, their demand forecast is for demand to improve by 5.8 million barrels a year to 96 million barrels per day by the end of the year. So 500,000 barrels of oil would amount to about an extra 5 million barrels a day by the end of the year. But with the cautious optimism at the back of their minds, or at the front burner, so to speak, they would watch. Like, for instance, in the United States, where winter storms have been responsible for some of the output that has been taken off the market. I mean, if you consider that that's temporary, and in a matter of weeks, those refineries could be back on stream, you have to see how much supply comes back on stream, and how that could impact prices. There's some OPEC producers who have continued to, maybe not continue, but have cheated on their OPEC quotas, like Iraq, who have about 200,000 barrels above their quota in February, and that's another cause for concern, because if the Saudis take back their 1 million barrels of oil a day, I mean, that's what is a tightened market now might return to a surplus. So I think there's a lot of cautious optimism. The recovery in the global economy with vaccines and increased flights and leisure activity and travels. Obviously, there's the improved demand outlook, but it's a fragile recovery. There's an imbalance where the vaccines are going more to advanced economies, even though they are the biggest consumers of oil. There's the Asian demand, but with cautious optimism, it means that they would weigh things and push everything that they would have done today to this time next month.
If eventually the quota is increased, as anticipated by most analysts, and oil price comes down further, will that change the narrative we're seeing playing out now here in Nigeria with the PMS pricing?
I don't, not in the short term. Nigeria is implementing some compensatory cuts, as it were, in December and in January. With output fell to 1.37 million barrels a day and 1.34 million barrels a day. But in February, we're here that it's up to above 1.5 again. So Nigeria might need to completely finish up its plan for its compensatory cuts, and that might extend to sometime in Q2, after which it will return to its quota. Then, with outputs improving, then we can go back to 1.8 million barrels a day. For now, I think the quota of 1.41 will remain in place.
You did
the impact on.
You did mention quota cheating before, and Nigeria has been called out for quota cheating. What is the implication of this for Nigeria?
I think it's something that they have to. I mean, the trend for the past in the Q2 and Q3, Nigeria produced above its quota. By the end of Q4, it was below its quota of 1.41 million barrels a day, and hopefully, even with the output levels in February, we hope that by March and April, even in extending into Q2, that the production levels will fall below quota, and I mean, it would seem to be falling below quota, and it will remain that way until, it's uncertain as to the period of compensatory cuts, how long that should last. But if I imagine two quarters at the very maximum, and if Nigeria keeps its production way below its quota for 2 quarters, then it can now come back to the table and say, okay, I've done what I'm supposed to do. When can I return to producing above quota, back to my quota? And as the OPEC output increases, when can I return to, or when will I be considered for an output increase, for a quota increase, so to speak?
Okay, let's look at food commodities, basically domestic, and we've seen prices gone higher owing to the blockade in the north. But we understand that the ban has been lifted. Are we going to see a reversal, or how soon are we going to see a reversal in prices, or will the case be whatever that goes up remains there as it is with the case with Nigeria and not the law of gravity?
I think that the increase as a result of the blockade on food trucks coming down south, the increase in food prices was significant, as much as 100%. So we would see prices falling down. And obviously, it's not the only factor to consider. It's not the only factor propping up or pushing up food prices, as it were. The ban on the blockade and on the movement of perishable goods from the north, the onions, the tomatoes, and even peppers. I mean, that blockade, I mean, the farmers would have considered their losses, and obviously that would have been the key factor in them calling off the strike. But there are other major considerations as to why food prices have been on the rise. There's the insecurity in the north. Some of these trucks on their way down south, allegations of security agencies extorting the truck drivers. There's the ban on food imports, where food importers have to resort to the parallel market to obtain their forex to import food. There's also PMS prices that have risen in recent times, and the anticipation of further increases in the month of April, even though the NNPC is saying that right now there will be no increase in March, but we know that with higher oil prices are at 65. It's only a matter of time. So we expect that food prices will fall in the coming days. Food prices, the prices of food, of the perishable foods that were affected by the blockade will fall. But there's a general trend in the rise of food prices. And there's also the factor of seasonality, where this is the planting season, so there's usually that increase in prices in the planting season.
Anyway, it's good news the strike has been called off. What's your outlook for both the agric and oil commodities in the coming week?
In the coming week, we'll see the impact of the ending of the blockade, where the impact of even the commodities that have not been affected by the blockade, the ones that are affected by seasonality, they will continue to rise further. The ones affected by insecurity in some parts of the country, they will continue to rise further. Oil prices would wait for OPEC to make their decision today. We expect that if they push the can down the road, so to speak, oil prices would rise further. Well, some people there's some analyst projections of oil reaching as high as $70 a barrel by the end of the month if OPEC indeed push the can down the road. So, I mean, that's a positive for Nigeria's revenues and external imbalances. But the impact on PMS, the landing cost of PMS, is something that will be heavy on the minds of everyone.
All right, thank you very much, Nosike. Thank you for your time, and do enjoy the rest of the day.
Thank you.
Okay, before we look at the markets, a quick recap of what's happening at the global oil market today. Prices rose for a second straight session this morning as the possibility that OPEC plus producers might decide against increasing output at a key meeting later in the day lent support alongside a drop in U.S. fuel inventories. Brent crude futures added 27 cents to $64.34 a barrel after climbing more than 2% on Wednesday. U.S. West Texas Intermediate crude futures gained 19 cents to $61.47 a barrel. The market had been expecting OPEC Plus to ease production cuts by around 500,000 barrels per day from April. Okay, trading on the Nigerian Stock Exchange has been muted this week as investors digested a slew of mixed earnings reports. Joining us now to discuss earnings from the consumer goods and telecom spaces the direction of the equities market in the medium term is Obeyemi Ani, Associate Research and Strategist at Codros Securities. Good morning, Obe. Thank you very much for joining us.
Good morning. My pleasure.
So how would you describe the performance of the markets this week?
I think the market, the performance really has been muted. We've seen mixed earnings come through this week. So investors have really just taken time to digest those. With the way fixed income yields are rising, there's a lot of pressure on the market, a lot of portfolio reallocation from equities back into fixed income. So all of that really has, led to the weak activity and slightly bearish sentiment that we've seen.
Let's get into the fourth quarter 2020 earnings that we've seen, starting with the consumer goods sector. We've seen some market bellwethers like Nestle Nigeria and Dangote Sugar Refinery release their earnings. What has been your assessment of their performance?
Yeah, so 2020 was a really challenging year for the consumer goods sector. The effect of the pandemic on, cost pressures and, demand from consumers was really negative. So Nestle, which is usually a strong performer and quite, resilient company, I was able to grow top line, but only marginally in Q4, about 2.3%. For the full year, just flat 1%. Driven mostly by beverage sales, so that's the likes of Milo and Nescafe. Surprisingly, we saw that food declined. Food segment is majorly made up of Maggi, but we know that is quite a competitive segment, as management has said. EPS came in down about 14% for the year. This, I think, is the third consecutive decline in EPS. So it just shows you how challenging the environment has been in recent years. EBITDA margin came in at the lowest since 2016. So it seems like a bit of deja vu from what happened, during the last recession in 2015, 2016. But otherwise, cash generation for Nestle was quite strong. Leverage also increased, so they have a new $200 million loan agreement with the parent company. We saw them pay down the previous debt balance earlier in 2020. But this, we feel, is just to manage their working capital with the poor FX liquidity situation in Nigeria.
All right, let's get into results from the sector that actually drove growth in the fourth quarter. That's the telecom sector. The market leader, MTN, released its earnings over the weekend. What are your thoughts on the results, and what is the outlook for that sector?
Yeah, like you rightly said, it's the telco sector is really the poster child for growth in Nigeria. MTN came in with strong results, top line up about 15% in the year. But I mean, no company is immune from the challenges in the Nigerian operating environment. So EPS was actually flat at 1%, and this was due to the FX situation. They had to reconstruct some of their agreements with their lease providers. They moved the reference rate from the official rate to the NAFEX, and we saw that was valued about 2 to 3 times last year. So all of this brought EBITDA margin to about 50.9%, which is lower than the previous year. But positives that we can see was that with lockdowns in Q2, Q1, data growth and data traffic was quite impressive. Data revenues came in at 51% higher year on year. So this, as we know, data gives you a lot higher average revenues per user, and really is the future for telecoms and telecoms earnings going forward. But what we liked was that despite the flat EPS growth, MTN actually paid out about 93% of its profits as dividends, or they plan to rather, compared to the guidance that management gave before of about 80%. So, they're trying to compensate investors even though there are challenges in the environment.
All right. What is your outlook for the equities markets over the rest of the week and in the medium term?
Yeah, I expect that trading will continue to be mixed. Investors will continue to digest results. Earnings season isn't over. But, we're keeping a keen eye on what is happening in the fixed income market. That is a major determinant of what is going to happen in equities. We're seeing that investors are demanding for higher rates across all segments of the fixed income market. We've seen the CBN push up OMO rates to around 10% levels to try to entice foreign investors. As a result, local investors are seeing that and also trying to demand higher rates. So in the medium term, we're likely to see rates continue to inch higher in that space, which will be slightly negative for the equities market. But we do not expect that fixed income yields are going to get to the levels that we're used to, of 15 to 16%. So we still see that dividend yields in the equities market, if you compare them to maybe 1 year Treasury bill, will continue to be attractive. For example, Dangote Sugar paid a dividend which implies a yield of about 8.4%, which is a lot higher than what you get in the fixed income market. So if you continue to see yields like that, I think investors will have no choice but to take positive return in the equities market. So overall, at the end of the year, we should still see the market close in the green.
All right, we'll continue to be hopeful and optimistic there. Thank you very much, Ope. We do appreciate your time. Okay, we'll take a quick break, and then when we come back, we do a crossover to London. All right, let's do the morning call with Juliana. Good morning, Juliana. Well, one major takeaway from Sunak's budget yesterday is that people will pay more taxes to fund the budget. It's the morning after the budget presentation. So what are the different views you are getting about this?
Good morning, Chimase. I think the British Chancellor, Rishi Sunak, is pretty happy that Meghan Markle is dominating the front covers of the British press because yesterday there were lots of tax increases. In fact, there were more tax increases than we've seen from a Tory Chancellor in about 30 years. Decades of successive tax-reducing policies that Conservative governments had put in place have now been reversed. The main headline is the corporation tax, which is a tax that big business pays. That is going to increase from 19% to 25% in the next 6 years. If this is only going to affect those whose businesses turn over more than £250,000, if your business takes more than £50,000 but less than £250,000, you'll also pay an amount, but not up to that
Also, as well, another main headline is the freeze on the income tax threshold. Now, currently, if you're an employee in the UK and you earn less than £12,500 a year, you don't pay any tax. That's going to be frozen for three years, which means, of course, it's not going to be going up with the levels of inflation that are expected to go up. So that freeze is also going to be affected. And also, as well, the fact that council tax will be increasing. There'll be £2 billion worth of council tax increases. This is likely going to add about £5 every year to people's bills. There is so much more. Of course, Rishi Sunak, the governor, has said that the Chancellor has said that, he's got to balance the books and he's got to put back billions into his coffers, but not just yet. So even though there was billions of pounds worth of giveaways and grants for businesses, there are lots of hidden tax details there.
And the budget also phases end of stamp duty holiday to prevent house buyers facing unexpected bills. Are the people happy with this arrangement?
Yeah, people are happy. I've got to say, it's definitely not the headline from the budget, but it is a good story, something that was leaked before yesterday's announcement. We know that the housing market has seen a rapid activity since the stamp duty holiday was introduced last year. It was to end on the 31st of March. It will now be increased. And I think coupling this with the fact that the government are going to be backing 5% deposits on mortgages is going to be fantastic and really is going right into the direction of Boris Johnson's pledge to turn generation rent to generation buy in this country.
The British government has been accused of breaking international law by the European Commission after ministers said the UK would unilaterally act to give Northern Ireland businesses time to adapt to post-Brexit rules. What is the UK government's response to this?
Well, we haven't had a response from the British government yet. David Frost, who's the EU Brexit political advisor to Boris Johnson, will be speaking with the EU Vice President later on this evening. The EU are not happy, and that's because the Northern Ireland Protocol's popped up again. Northern Ireland remains in the single market within the EU because of avoiding a hard border in the island of Ireland. So anything that comes across the Irish Sea, that sea in the middle of Ireland and Britain, needs to be checked. There was a grace period to allow the easing of this transition. It was due to end on the 31st of March, but the British government have now said, and I quote, there will be an operational easement. So not an extension of the grace period, but an operational easement until the end of October. This has caused outrage, particularly from Ireland and those within the EU. They believe, again, Britain are trying to, square their muscles and breach international protocol. So there will be a discussion tonight, but Britain say they're doing it because it's just so much bureaucracy and red tape that they need to give Northern Ireland businesses enough time to get the measures correct.
All right, Julian, I will see you later in the day. Okay, let's talk crypto now with Ladi. Well, Ladi, you were going to talk to me about the NFTs. You called it non-fungible tokens. What's that all about?
Trending right now, like Bitcoin, it is a fungible token because you can exchange one Bitcoin for another. But for NFTs, you can't exchange an NFT for another because these are like collector's items, like paintings and music rights. You can actually have them linked to the blockchain through NFTs. So that's what's trending at the moment, Yeah, so let's look at the market cap. We have $1.5 trillion. The total market cap down 0.49%. We have the 24-hour volume, $137 billion in the total crypto market. Bitcoin dominance at 60.83%, up 0.19% there. Price of Bitcoin, $49,485 at 8 a.m. this morning. But currently, the price is around $49,000 on the dot. 24-hour volume, $57.06 billion. Let's look at Ethereum now. That's the king of the altcoins. $1,557, up 0.07% at 8 a.m. 24-hour volume, $23.94 $2 billion. Now let's look at the top 5 gainers. As I spoke to you before, the NFTs. This one, CHD, is an NFT platform engine, an NFT platform up 52% this morning. That's why I feel like the NFT platforms are trending this moment. Mana, Decentraland, is also an NFT platform where you can actually own a virtual land. Imagine owning virtual land, up 22% at 37 cents. So it might be a good play to look for other NFT platforms to see how you can make a profit. And now we see the top 5 losers, Curve Dow, $2.25. Let's talk to Franklin Peters, investment expert. Hello, Franklin.
Hi, good morning.
Good morning, great to have you. So the crypto bull run, where is the market headed right now? Because I've been waiting for this alt season. I've not seen it yet. What's going on?
Yeah, it's definitely going to happen. We saw some movements some few weeks ago, last 2 weeks. We saw BNB go from 2 figures to 3 figures. Today, BNB is trading at over $200. BTC had already gone up. But talking about altcoins, we're going to be seeing some huge volumes coming in. The year is just very young, and what has happened is just the tip of the iceberg.
Okay, so...
All right.
Yeah, I'm listening to you. You can go on.
All right, so the likes of Ethereum, has done, greatly this year. Cardano went from $0.8 last week. It actually went from $0.0 something, but $0.8 last week to $1.19 as I'm talking to you today. And Cardano has just crushed Binance Coin as the 3rd largest coin by market cap. It's currently number 3. And Binance is going to do, BNB is going to do really great because of some fundamentals around it this year. They have just launched their own swap platform. They call it Pancake Swap. And the coins that are backing those ones, which we call Bake and Cake, has done really well as well. Polkadot has been doing massive. The crypto space never ceases to, amaze people. We have seen the likes of Dodo. We have seen Am. That was last year. We continue to see some funny names. But then that is what makes the crypto space very interesting.
Quite interesting. Pancake swap, sushi swap, all edibles, I must say. All right, Franklin Peters, investment expert. Thank you so much for your time.
Okay. All right. Thank you so much for having me.
Yeah, there we have it. The market not to do any bad, but let's see how Bitcoin plays this weekend. We might have a dump or a pump. We'll see how it goes.
That'll be the case. Let's just look out for it. Perhaps people like me might probably want the Bitcoin to come down a little bit, and then we'll see if we have the opportunity to play in that market. But this year, non-fungible tokens, you say it's doing pretty well. How well is it?
Well, for non-fungible tokens, they cannot be exchanged for each other. So they're unique items that are placed on the blockchain. Like, for instance, you can have a painting, launched on the blockchain and actually traded. Because recently a video was traded for about $300,000 on an NFT platform. So that's why they're trending at this moment.
Okay, for the altcoins, your guest talked about Pancake Swap and Polkadot. I told you the other time, I love pancakes. Perhaps that's the altcoin to look out for.
The edible names.
Pancake. Okay, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwagu.